Well, let's talk a little bit about crypto, and let's talk about Bitcoin options or Bitcoin first. Of course, when we talk about Bitcoin, we talk automatically about the other crypto as it's the leader of the market. And what we can see today, we will just have a quick look about the chart to get an idea in order to trade options. The interest in terms of, or the advantage in terms of trading options is to set some strategies based on a scenario. Of course, the strategy that we will be setting up should, in fact, meet some conditions, so it should fill some conditions. The first one and the most important one will be the risk. The strategy should be controlled in terms of a risk. And here I say that if we think, for example, we have a bullish scenario, we think that the Bitcoin, and this is valid also for stocks or forex as well. If you have a bullish scenario, we think that the underlying will go up, and we set a strategy according to that scenario. The risk, which is the opposite scenario, that the underlying will not go up, the risk should be affordable and low as much as possible. Okay, so here we will see first what will be the scenario with the Bitcoin, and then we will set a strategy on it. Well, here, this is the weekly chart, and we will just take a quick look on what we can in fact predict as a scenario logically according to the technical analysis basics. So here, if you, this is the weekly, and if you just have a look here, it will be just a clear double top. Okay, so if you are new to technical analysis, the double top is a bearish pattern, and the signal of the sell, of course, here it does not mean that we sell immediately. The signal of the sell would be once the underlying, here is the Bitcoin, drops below the neckline. The neckline is here, so we can see that now looks like that the Bitcoin is going there. We have no catalyst to buy. In fact, each time the Bitcoin rebounds a little bit, we have again a drop, again a drop. So, in fact, here we have a small channel, okay, that in fact rejects the price each time the Bitcoin goes there. Up one time, here a small time here, then a third time. Okay, now what do we expect from the Bitcoin? In fact, let's analyze step by step. Here we have an ascending trend line, inclined one, that's held each time the Bitcoin wins there. Okay, one, two times here, and here two times. And you can see that now it are very near that zone. This zone as well is that yellow or orange curve. The orange curve, you can see it here, is the moving average 100. The moving average 100 held each time since we had the run up. Since the Bitcoin went above it, it was the long-term trend line, the long-term support. So now we are very near to it. It's exactly also the inclined trend line, and also the green curve here, this one, which is the lower Bollinger Band. Well, here if we note everything here, we have that zone, so important zone, exactly that point here, around 35,000. The 35,000 35K is the lower Bollinger Band weekly plus the moving average 100 weekly plus inclined trend line. So what we call the convergence, it's a very strong support. Well, a very strong support is not meant to hold all the time. So here we can set an interesting scenario here. What will be the scenario? As long as the 35,000 support holds, we have a potential to rebound. Okay, we have a recovery, a potential recovery from here. What will it be a signal to buy? No, it will not be a signal to buy, because here we should invalidate two patterns. The two patterns that we have and we should invalidate, first, it will be the double top to invalidate and the bearish flag. Oh, okay, we saw the double top. The double top is the stuff here. This is the double top. It's okay, we understand it, but where is the bearish flag? Guys, the bearish flag is a pattern, a bearish pattern. When we have a drop like that, basically we will have a consolidation, or let's say a movement, a horizontal movement, or an inclined movement trying to recover. Then it will not recover. We will have the breakout of the lower band here. Then it's again a drop. Well, if you have a look and if you just focus on the chart, you will find it exactly here. It's that drop, then that movement here. And what do we see here now? Now we see that the Bitcoin is attacking again the lower band. Okay, the lower band is exactly, let's say we can take that white line. So here the breakout of that line, it would be a dangerous signal. Well, dangerous signal for people who hold the Bitcoin. So because it will generate another signal here. It will be the breakout of the neckline around 30,000. So the breakout of that neckline will be a major event. Well, let's talk first about the bullish scenario, when to buy. In order to buy, as I told you, we need to invalidate two bullish patterns, two bullish catalysts, because for now, sorry, two bearish catalysts, because for now it's just bearish. If you tell me I will buy, I will just tell you good luck. Okay, so here the first, we set the double top. In order to set or to invalidate the double top, the stock, or sorry, the underlying here should break out 50% of the last movement of the double top. What does it mean? Here we will take it slowly. Okay, we will up, we will do like that, and even I will remove that Bollinger Band. Now we know where is the lower Bollinger Band, and I will remove this to see it clearly. Okay. In fact, in order to invalidate that bearish flag, it's simple. We need the underlying to go above the upper band of the flag. It means that the Bitcoin should close above this inclined trend line. So if we do a projection here, that price should be around $50,000. It means that here, in order to expect a real buy, that the underlying here, the Bitcoin will recover and will resume the upper trend, the bullish trend, it's mandatory to break and to close in a weekly basis about 50,000, 51,000, 52,000. That will be the range in order to buy. If not, we cannot talk about a bullish trend. We will just talk about a rangy trend. The stock will, or the underlying here, will just fight up and down till one of these bands will be will be um, will be broken. Now, what if, because here we don't see anything that will let us say it will go up, because everything here turns to the downside, up. Okay, the breakout of this level, which is a so important level here, okay, which is the 35,000, as we said, will open the neckline. The target will be the neckline. So the neckline held several times. It worked well. One time here, here, and recently near here. But as you know, as long as support is tested, hit several times, one day it will not hold. So the problem here, if it does not hold, what would be next? You can see there is nothing. There is nothing, guys. If this zone here does not hold, it's a huge drop. It's a sell-off. It will be bleeding. It will be bleeding till 5,000, between 5,000 and $9,000. Why? Because if you set the Fibonacci here from up, from the last run up for here, from that point to the up side here, we will see that the next level, once the 100% is broken, let me show you, was the 100%. Maybe you don't see it because it's in gray, but here it's the 100%. Then the next, it will be the next Fibonacci level, which is the 1.61, which is around $6,500, because there is no support once the 30,000, the neckline, is broken. So here we will have a clear scenario. We have two scenarios with the Bitcoin. Let's sum up. Well, I will just tell you with the double top. In order to invalidate the double top, we said the bearish flag, the stock should go above the upper band of the bearish flag. So here 50,000, 51,000, let's say. How about the double top? Let's clean a little bit. Tack, 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 tack. Great. So here the double top, in order to invalidate it, the Bitcoin should break out the 50% of the movement. So this is the last movement. Okay, even it's the same here. The 50% is around 49,000, 50,000. So it's exactly almost the same level as the bearish flag. So in order to break out the bearish flag, to invalidate it, the Bitcoin should go above 50,000, 51,000, and also above 50% of the last movements from the Bitcoin. So it's the 49,000, 50,000. So between 50,000 and 51,000, a close above that zone will be the bullish signal that now we can talk about a new bullish trend. Then we can talk about 100,000, 200,000, as a lot of gurus are advising. But for now, below 50,000, guys, there is no buy. We cannot do anything. Even more, I will tell you that now prepare yourself maybe for a sell-off, because you can see clearly that all the scenarios here. Well, if this zone first, 35,000, does not hold, then the 30,000 does not hold, direction the south. Well, I don't wish that, but that would be the scenario. Okay. So here, let me just write the bullish plan by above. Here I will take a little bit more space, I will say 52,000 to be sure. By 50, above 50,000, it means after a close in a weekly basis. It means the week when the Bitcoin will go above the 52,000, on at the end of the week, I should see the candle, the weekly candle above that zone. Then the target, we can talk about the targets. First target, we can set a target at 65,000 or 70,000, which is the double top, the breakout. Then we will see the Fibonacci extension and so on. The timing is this. Why? For simple reason, the invalidation of the double top and the invalidation of the bearish flag. Here we talk about the psychology of the market, guys. Trading should be simple, but it should respect the rules of the game. These are the rules of the game. Okay, this is the bullish flag, the bullish plan, the unlikely one for now. The more unlikely one to happen would be the bearish one. Bearish one. Well, when I say 30,000 and 35,000, these are supports. The Bitcoin can also rebound from there. So in order to sell, we need, okay, here, we need a close below 35K. We'll open the 30K. Now you know what is the 35K. The 35K again is the inclined trend line, the moving average 100, and the lower Bollinger Band. It's a so strong one. So if you see a rebound signal from the 35K, when I say a rebound signal, I am saying a big candle, a big green candle, for example, like this one, but green, okay? Then why not? We can talk about a reversal signal. But if there is no reaction from there, guys, prepare yourself to go to the south. So the breakout, so here it will, I expect to see a fight, a battle between 35K and 30K. It will not be that easy because here you can see, guys, it happened. The stock dropped to that zone that we had a fight here. Then buyers bought again. So maybe here the 30K, this is the last chance for the Bitcoin before dropping. If not, it will drop. But here you see buyers are defending there. First time here and the second time we had a fight here. So we will see what will happen. So potential buy at 30K after a clear signal. Otherwise, a close. And here I will even close below 30K will represent danger, a risk to drop even to 6K because there is no support there. Okay, here you will see, guys, I will even add an alert. This is the way I work. I will add an alert just below 30K, for example. Yeah, near, for example, here, yeah, up. Add an alert up, then add an alert here just below 35 or near 35 to tell me that, oh, we are testing interesting level. So here have one alert, two alerts, and another alert here around near 50,000, for example, 48,000, just to tell me that there is something happening. So like that, I will be already another alert here just above the high of the last week. So here the current week. So here I will add an alert there. Okay, so these alerts will be sent automatically to my email. So like that, I will know what should I do. So here we have the two plans, the bearish when to buy with the K zones. Otherwise, I don't touch, I don't buy, I don't do anything. Okay, let me see if we have any questions. So This is the plan. If you have any questions, guys, before I switch to options, feel free to use the chat. Well, I don't see any questions. I hope that everything is clear. So you can write, guys, that these two plans, and you can do just the same. Set your alerts on all your platform, Binance or whatever, and wait for the action. Okay. Well, don't see any questions. Now, how can we take benefits from these scenarios in a way that, for example, for someone that holds already already Bitcoin, uh, and of course we don't want the bear scenario to happen because we are a long-term investor in Bitcoin and so on. But at the same time, we don't want to lose from the bear scenario. Well, we'll talk about hedging. Hedging means, in fact, the to take a position, the opposite position to your portfolio. What does it mean? You are buying something, for example, you are buying a stock, and here your risk if the stock drops. So you need to add a position that will make profit if in case the stock drops. Okay, 1 second. Sorry guys, I'm back. So in fact, as I said, hedging, for example, you hold a position in a stock. It's a long-term investment, and you don't want to sell it from the at the near term. But at the same time, you don't want to lose that much from the variation of the stock. So the idea here is to add a position that will cover you in case the stock drops. Well, here we will take an example from a stock, then we will switch to Bitcoin options. That will be exactly the same. Okay, so here let me just switch to my platform up here. This works, of course, with all the platforms. Here we will see what we can do. For example, a stock that we can hold and at the same time cover the downside risk. For example, I will take a stock, for example, Roblox, because I see it here. Roblox, all say that Roblox has that potential. It can go up. It's at $34 now. How do I know? It's here, $34. And let's say it's an opportunity to buy the stock and to hold for 1 year or 2 years. Okay, because Roblox is coming from $130, I think. So it lasts a lot. So if I buy the shares here, I can do it through Advanced or on Thinkorswim or Webull or any Saxo Bank. Here I can buy the shares. So here I am buying 100 Roblox. Well, here it does not say which price, but it's basically $34. And I will hold for several months, for example, for 1 year. My downside risk is the drop, as I said. So what is the potential hedge here? Of course, I need to buy puts. Why buying puts? Because puts make profits if the stock drops. So here I will be losing from the shares, but I will be making profits from the puts. So the selection of the expiry date here will be crucial because we need to cover the horizon time we will be holding the strategy. For example, here, let's say 2023 January. Just an example, but you can go for more if you want. And here I will try to buy something not that expensive. The ask is here. The puts, if you never traded puts, the puts are on that side and the prices are on the ask here. So here you need just to multiply this number times 100 in order to get the real cost. So here, for example, if I buy the 20, okay, the 20 strike, okay, I believe that the stock can go to 20, can drop to 20. Then I will buy uh, this contract that will cost me $263. Okay, $263 to cover the downside risk. Well, here we need to ask the question why 1 year, almost 1 year, for two reasons. First reason, because we need to cover the horizon time, as I said. The second reason, and this is the most important, because of the theta. When you trade options, our biggest risk, our problem is that theta. What is the theta? The theta is how much we will be losing every single day from the premium due to the passage of time. What does it mean that minus 001? Imagine that here we have only the put. We are buying one put here, okay? The theta is minus 001. You multiply times 100 because with stocks we multiply it times 100. Here we lose $1 every day due to the passage of time. Even if the stock does not move, even if the market is closed, even over the weekend, we lose $1 from the $1 from the option. So when we go for a long-term option, a long-term expiry date, the theta will be small. For a simple reason, we pay a price for it. Long-term options have what we call the time value, a higher time value because we have a lot of time to go till the expiry date, so the price will be expensive. So when we pay that expensive price, in return, we have a small delta. What does it mean, a small or a small delta? Sorry, a small theta, not delta. Small theta. It means that I can just hold my position without worrying about the time. Because if you go for some stocks, for example, like Tesla or some, you will see that the theta is so high. It means, for example, every day it can cost you between $100 and $300 just to hold one contract. What does it mean? It means if you have a high theta, that will cost you $100 every day. If the stock does not move and still choppy that day, you lose $100, even if the stock stays and remains the same. So when we buy options, we need to buy an option with a low theta. So that's why we go for a long-term expiry date. Okay. Well, now, is it a good setup here? It will not be a perfect setup because we need to change something here. Well, first, let me show you the results because here we have a simulator. If we do that strategy, what should we expect from the movement? I hope that my simulator is working because over the weekend there is maintenance. Okay, perfect. It moves. It works. So here, let me change this to the window. Well, here, to explain to you, we have that curve. That curve is the potential return. PNL, see, PNL, P for profits, L for loss. The price is here, so if I go right, it means I increase the price. Well, we trade right now exactly here. We are here. Let me remove what we have from here. Take. Okay. So we are exactly here because now the stock is around 35, 34. Okay. So if I go right, I move right, I am increasing the price. So here, if the stock goes, for example, to 50, we are basically making $1,500 $477. You can see this on the right panel. Okay, if the stock goes from 35 to 50, and we have 1 year for that almost. And why now? The theta is crucial because by waiting, if I wait 1 month and they pay $1 every day, it will be just $30 lost, while I can make 1,400, so I will not even feel that loss. But if you go for a short-term expiry date, then of course, and let's say this movement happens after 1 month, the 1 month maybe will cost you $50 every day. So at the end of the 1 month, it's over. You cannot make anything. Well, is it again a good setup? No, it's not a good setup, because you can see here, I didn't cover the downside here, because if the stock drops, for example, to 20, I am losing between 1,000 and 1,600. Why 1,000 and 1,600? Because we have the result with a dotted curve if the movement happens today, and the result if the movement happens at the end of the expiry date. So between 1,000 and 1,600, the difference is the theta. If the stock drops today at 20, I close today, I am losing 1,100. If I wait, when we say wait, we say theta time decay, losing due to the passage of time, you lose 600, the difference between the two numbers. So here it's not a good setup. It's not a good strategy. So I need to adjust some numbers here. Well, see here, I will change this again. I will go back. So here, if I buy one put, I need to buy the delta. Here I will buy, for example, 14 shares, but not 100 shares, because here we have a lot of shares. With 100 shares, we have a lot of shares bought. Here I need to buy exactly the delta. The delta is how much we are making profits or loss, the variation of the premium due to the variation of $1 or the movement of $1 in the stock price. Okay, so now we will see if the strategy is better balanced or not, because the idea is to not also lose if the stock drops, not only focus on the upside, because if we want just to make profit from the upside, we can just buy the stocks, that's all. Okay, so here we will see that here we have something interesting. Well, just if we are not familiar with some graphs or charts, this is the zero. When the chart is above zero, here we are making profits. When it's below zero, I'm sorry that to repeat that, I feel just myself stupid to say that, but it's, well, below zero we are losing. Well, you can see here that the stock goes up. Of course, here the movement to the upside, the stock goes up, the curve is going up. The stock drops, the curve is going up. What does it mean? It means that either the stock goes up or down, we are making profits. How do we know? With numbers. P&L for each scenario. If the stock goes up 50%, you have $89 profits. If the stock drops 50%, you have $178. You will tell me 50% too much. I tell you guys, it's dropping from $130. Now it's at $30. So if you go for 1 year, 2 years expiry date, of course, we will have a huge movement up or down. It can drop to 17. It can drop to 20. It can go up to 100. Who said that from 130, it was going to drop to 34? Nobody. So here, it's a very interesting strategy. Now you will tell me, well, it's not really balanced because here we don't earn enough from the upside. It's just $90, while we earn more if the stock drops. It's a normal situation, guys, because options are non-linear. They are like the exponential curve, because they accelerate in the movement, while the stock is a linear. They have one rate, $1 profit per each $1 app. It cannot be more. But options, no, they accelerated that you call the leverage. They are not leveraged. In fact, we talk about leverage with CFDs and what the brokers invent, but it's not the case here for options. But you can understand it like that. So here, in order to do that, we can just buy more instead of buying 14 shares. We can, for example, buy 20 shares, 20 stocks. Then here we will add more balance in order to get something like that, a curve more aggressive here. Here will tell me, wow, this is perfect because we will 100% make profits. Not true. Because here we have one case when we will be making a loss. It will be if the stock stays sideways. During 1 year, it decides to not move from 35. Well, you tell me this does not happen. Well, for the honesty of the teaching, I need to tell you everything. If the stock never moves, it stays there, like all the stocks continue working and the Roblox sleeps and keeps sleeping till the end of the 1 year. So you wake up, it's also still at 35 after 1 year. You lose. What do you lose here? You lose $400, $470. Okay. Will it happen? Well, I never saw that situation happening, because within 1 year, of course, we will have either a very nice movement to the app or a drop. And the thing here, you don't need to wait till the end of the 1 year in order to close our position, because once we have 20%, 30% up or 20%, 30% down, we close the both legs and we book our profits. So like that, you can be okay with your strategy, with your stocks. And this is a way in order to hedge. Of course, we need to learn very well the delta, the vega, and so on. But I try to make it simple to show you what you can do with options. Just not like buy and wait, buy and hold, but you can do some strategies. Of course, if you are neutral. Now, if you have really a bullish conviction or a bearish conviction, you will do all the strategies to that side. So then you will not be able to make profits if the underlying goes against your conviction. Well, it happens to everyone. That's the current market conditions. Anyway, this year, as you can see from the Bitcoin, from the crypto, from the stocks, no one knows where the stocks will go, because 1 week or 1 day up, the following day down. So here, the hedging is so important. Okay, so this is the delta hedging. We got the delta hedging. Now, is it good enough? Well, here it's perfect. It's one of the strategies I like, but here you need, of course, a big capital in order to do that strategy, because you need to buy the shares and so on. What if you do another strategy, and that's what we'll be using for the Bitcoin? What if you do another strategy in order to take benefit from a scenario, and at the same time, not to risk a lot? Because as I told you at the beginning, we don't want to risk a lot when we do a strategy. Well, here even 400, it's okay. But what if we do another strategy? Well, another strategy will be the calendar, and that's the one that it will advise you in order to do the Bitcoin options. Okay, here I will apply it. For example, I will just show it to you on a stock that dropped too much. It will be Netflix. Let's say it's time to buy the dips and so on, because it's almost at $200. Drop it from $500, lost more than 50%. So why not? Well, I don't advise to buy. It's not my conviction, but here I will show you a way to set a scenario for that probability. It will be the calendar. The calendar will be buying one call. the call that you think, with the strike that you think that the stock will go there, and selling a short-term expiry date with the same strike. It's buying a call with a certain price, then we go for a shorter term expiry date and we sell the same strike. For example, here, let's say 280. Let's say, for example, by June 17th, let's say after almost 2 months, we play that probability that the stock will go to 280, go back to 280, while now it's at 218. So I am buying the 280 call. Then I will sell a shorter term expiry date with the same strike, 280 back. Is it a great strategy? We will see. Now, how much you need capital in order to do that strategy? You need $72. It's one of the cheapest strategies, $72, guys, in order to do the strategy. Why? Here I will switch to my Thinkorswim simulator because this one does not count the mid price. It will count 137, and this is not so right. The price, the real price, is not 137. It's the mid price, which is the average between the bid and the ask. And here it will be the pattern. In fact, here our maximum loss, even if the stock continues dropping, here, you can see the results from that window here, a small window. Even if the stock drops to $150, it will be $79. Okay, even if it continues dropping to zero, it will never exceed $79. Great. Okay, if we risk just $79, that's why the capital needed $75, $79. Now, what if the stock goes up? If the stock goes up exactly at 280, that will be our peak, the maximum profits we can get. How much we can get? It's 1,100 if we wait till near the expiry date, because the maximum profit will be near the expiry date. This strategy makes almost more than 20 times the investment here we are making here. So we are making 79,000. If till June, this is possible, then the stock goes near 280, we expect around $1,000 in profit. Of course, again, we can close whenever we want. We can just once we have the movement, we can close. Basically, even 5 times the 5 till 4 times the investment would be a great thing. Well, now we need to apply exactly the same strategy on Bitcoin. Well, for European guys, you can use Deribit. I am still searching for the US market. You have a lot of regulation there, guys. So I will let you know about the platform. For now, Deribit is available for Europe. And I will let you know about the US. I am testing one so far, but I'm not sure if it will be okay. So I will let you know once I contacted them, and they will be. I will let you know once I receive the answer. So for Deribit, this is Deribit. This is the link. Deribit is for Europe. So if you are in the US, I will let you know. So I contacted 2 platforms to see if they can. Of course, a platform, a regulated platform, because options are regulated from the exchange. So here you need a broker that is regulated from the CME, Chicago Mercantile Exchange. If it's just a broker that will just tell you, okay, I have options, but these are his options, it means like the what we call this, the other options, digital options. See the amateurs options, the binary options, well, these are to avoid 100%. So I will let you know once I get the response. For now, Deribit for guys in Europe. For now, it's okay. For the US, I am still searching. Well, that will not prevent you from learning. Of course, you can learn once we have the platform. It will be the same thing. Deribit, this is options. This is the Bitcoin going up and down. Just some mess here. So let's apply, for example, our plan. If the stock drops below 30,000, it will be a sell-off till 6,000. Of course, here the signal is the breakout of the 30,000. So here, what can be amazing with the Bitcoin is that you see a huge movement. You think that it will be the end of the drop, and just after it will just crash. Well, here derivatives, we go to block trade. Okay. First, you can go to options. Here, options, you have the expiry dates on that side. Let me show you. Okay, the expiry dates. Then you can click on each expiry date, and you will have the strikes and calls on the left and so on. For example, if you do here, for that may go ahead, tag loading. So here you see you have the calls, then you have the puts on the left, the strikes are in the middle, then the ask, here the ask for the buy, here the bid for the sell. What would be interesting with Deribit, I hope that it's the case for other platforms, that you have the price already in dollars. Some will tell you, okay, you need to calculate it. Here, in order to calculate it, just I will show you how to do that. You have that number. You see the number just above. This number, for example, oh, it's up here and here. For example, 0.0255. What does it mean, 0.0255? It's 0.0255 Bitcoin futures. You should multiply this number by the Bitcoin future price, then to get the $1,000. Okay, so here it calculates already for you the price. So here, if you want to buy this one, you click the ask. You need to buy one at $1,000. You believe that the stock will go above 39,000, and this 17 hours, within 17 hours. Okay, if not, you lose the $1,000. Okay, it's not the way we'll be trading. So just keep in mind that 0009 here, it's also 0.00085 times the Bitcoin value, then it gives you the 383. Okay. Buying a put, buying a call, why not? But, well, you know, it's a little bit risky if the stock does not go into your direction. Here it will be a big loss. So here we go to block trade, and through block trade we'll be able to do strategies, and this block trade is available only for the Bitcoin right now, not yet on the Ethereum. So create here, and you click tag. Well, here you can, I think you can even change, if I'm not, yeah, sorry, you can change, yeah, sorry, you can change the Ethereum. It's not available for others, other crypto. Some brokers, they invented this, but I don't advise you to do that. So Ethereum and Bitcoin, but not the others. And here you click add combo. When you see combo, it means it's a strategy that will include several legs. So plan breakout, BO breakout of the 30,000 will open, 30K will open the 6K. You will tell me it's not likely to go there. Okay, no problem. You will see that with options, we don't have this problem. Okay, so here I will go to select strategy. Then you have here lots of strategies. Well, each strategy will be good for a certain situation. Today we'll talk about the calendar. puts calendar spread. Why puts? Because it's a bearish plan, so we go for puts. Then you have here the plus, which is the buy. So the expiry date, for example, well, let's say December. Well, I will take time with this, December, okay? And here the sell will be the expiry date just before. So here I have December, I will go for September. So I am buying December, I am selling September. So the strike here, I will go for the lowest one, 15,000. Okay, 15,000, which is the lowest in the option chain. I cannot go lower. Can do also the same with the Ethereum. My target is 6,000, but if it goes to 15,000, I will be so happy. So the combo price here, the size, I will go for one. Side, it's a buy, because here we can buy the calendar and we can sell it. The sell is completely the opposite. So here it's 0.0056. Here I can just click add. Then here I have the strategy. It will just tell you what you are doing, exactly the same thing with the delta. You see here the net delta is negative. It means that you need the Bitcoin to drop in order to make profits. We will make profits exactly the maximum of the profit if it goes to 15,000. Well, unfortunately, this platform does not give us the simulator, but keep in mind that the maximum will be 20 times the investment we are making. If we close around 5 times to 10 times what we are investing, it will be perfect. How can we know the price? So here, see here, for example, this is not calculating for us the cost. The market price of the combo is 0.0056. So here, if I take the 39,000 cost here, the real cost will be equal to that number, 0.0056 times the real futures level. Well, here I will take just the BTC, but you should search the real futures level, which will be around that price. So here 39,000, let's say 800. Tag. Okay, so from my calculator, tag calculates 39,000 times the stuff and 39,800, let's say. 0056 9 here, right? 5655. See, it moves. So here it's exactly $218. $218 equal $218. Yes, this will cost us only $218 instead of investing thousands. And if the stock drops to 15,000 or near 15,000, as you saw with the simulator on the other platform, which was Netflix, the potential return will be between, let's say, 20, the maximum here, because here it's capped 20 times 218. So we can expect times the 218 times 20, so $4,300. And as I said here, we don't need this to wait till the end, but near the end of the expiry date, we will be making 4,300. And my exit rule, if I make between 5 times 5x up till 10 times, I will be so happy. I can just exit. What is my risk with this strategy? My only risk is what I pay for the strategy, $218. So you can say here, okay, I have a small Bitcoin or 0.005 from the Bitcoin. You can add the strategy, guys. So if this Bitcoin goes up, your current position can make profit. If the stock drops, this 218 limit the risk strategy will be also making profit. So like that, you hedge your portfolio. This is the way to hedge your portfolio with a small risk, $218 invested on a Bitcoin strategy. It's nothing. Okay, guys, so this is the strategy I am doing on stocks with an advanced, a very advanced setup, but the idea is there. This is the idea here. And we can apply the same on Bitcoin. Even you can, well, here, if we had lower than 15,000 strike, it would cost cheaper. But here it's the maximum, the cheapest we can do. In order to make it cheaper, we can go for a short-term expiry date, but I don't advise that. We need enough time with this Bitcoin. Okay, so this is the strategy. Well, I am in touch with the platform to get a paper trading account. So like that, I will provide you that paper trading account. So like that, you can trade risk-free on that platform. So you will see how everything works, and it will be also on options. I hope that it was not so overwhelming, lots of numbers, lots of things, but this is a very interesting technique and very interesting strategy that you can use. Do you have any questions? Or if some of you think that it's okay and it's yes, yes, it will be opened a service about Bitcoin options trading. It will be opened soon with some conditions to use the same platforms to know how to execute the orders, of course, because as you see on the other group, we spend the time explaining how to click the buy and sell button and how to call the customer services of each broker. So yes, we have some conditions using the same broker and to know how to execute an order. Because when I say buy the calendar, I will not have the time to say, okay, you click here, then you go to stuff like buy this, then sell this. Well, okay, babysitting, I'm not a fan of it. So I know that a lot of people know how to do, but there are still some investors that they don't even know how to open a platform. Yes, okay. Yeah, sure. Sure, I will let you know. So trading the panel charts on TradingView. I don't have the panel chart on TradingView. Maybe you are talking about the technical chart of TradingView. Marcel. TradingView or Thinkorswim? If you are talking about the panel, it's Thinkorswim. So the chart is here. And I will show you the panel. Maybe you are talking about the panel of Thinkorswim. And what is Saron Camp? What is the best platform for the US? Well, in fact, there are lots of platforms, but basically you have a lot of regulations. So I am just still searching. I will not tell you Binance or another one. Then I thought that Deribit was available on the US, but my friends on the member on the group, my members told me that no. So I am still searching. So I will send this information, as I said, once I get it. So I cannot say what is the best for now. I will not take the responsibility to tell you one this or this because I didn't test anything. Now the Deribit for European guys, yes, you can go for it. I sent you the link. Okay, so one of the conditions to join our service is to use that link in order to join. For the US, I will send an email about the platform during that week once I receive the information. So just GMA21, I will just maybe reply to Marcel. Maybe you are talking about this one, not TradingView, but Thinkorswim. So here is the panel. So the panel, this is Netflix. Well, it's the same logic, just because we don't have the tools on Deribit or any other platform to get that simulator. So here the stock goes up. See here, from the bottom, the stock goes up, the region goes up. Okay, tack, 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 tack. If it drops, it drops, it drops, it drops. Even if it goes to zero, I'm not losing more than $78. Okay, so this is the panel, and this is what we need to do with Bitcoin. It will be for the put. It will be from the other side. It will be like that. If it drops, we are making profit. If it goes up, it will be a small loss. Here it was $218. So this is the same philosophy of my strategy. Okay, so yes, well, it was not Bitcoin option because as I told you, we don't have the panel simulator of the Bitcoin option, but on Thinkorswim, it was about Netflix to explain to you the logic, and it's exactly the same thing that we will have with Bitcoin. Gmay21, hi Steven, if you buy 2 contract calendar strategy for stocks, can we sell one at 5 times gaze? Yes, exactly. When you want to exit one, partially booking the strategy, for example, you have 2, you can exit 1, you have 3, you can exit 1, 2, 3. So you can decide about the number of contracts you need to exit, and you let the other one run, while you know that your maximum risk is what you paid for the strategy. That's why we set it from the beginning at a very low risk. Ron Cam, thank you. We'll sign up for your service once it starts and they get the best. Sure, of course, I will send an email about that. Well, you see, guys, it's not so complicated. Just buying this contract, selling this contract with the same expiry date. I'm just wondering why sometimes it seems to me it's like we need to work in the NASA in order to to enter these small things. But yes, of course, it will be a very interesting one. Bitcoin is one of the most volatile, maybe it's the most volatile asset, and doing huge movements to the up or to the down are of course possible. So why not? The strategy is the perfect for Bitcoin, for these volatile stocks, and we are doing already these strategies with my members on stocks, and it's robust enough. They can't even say compared to the previous trading with our conviction the stock will go up, buy call spread. Now, no, we no longer do this. We buy the calendar. We know that we are making a smaller risk. Then we are fine with that strategy. Okay, guys. So here I will just send you my website. So in case you need to see the services. So once I will start sharing here some articles about Bitcoin. So keep an eye on that. Keep an eye about that. So then here is my email, contacts@smioptions.com. Okay. If you have a question about the Bitcoin servers or something, I am sending the information through email. But if you need to contact me, contact@smioptions.com. If you don't have any other questions, guys, thank you very much for joining us. We will start doing that Bitcoin strategy very soon. I will keep you posted with the platform in the USA. I don't advise you to sign up the USA and the Canada, of course. I don't advise you to sign up to any platform because, as I told you, there are regulated platforms and just platforms that they invent products. So don't do the mistake. A little bit of patience and keep that trading plans, the buy and the sell, and think about me when it happens. Thank you very much, guys. I wish you a very nice weekend, and talk to you very soon. Take care. Bye bye, guys.